Hi, I'm Trent Grissom, Director of Business Development at Waterfront Advisors, and today I'm being joined by our Chief Investment Officer, Chris Harrington. Chris, 2020 has not been short of news headlines. What do you make of the most recent GDP report?
Worst on record, I believe, quarterly, negative 33%. It's actually really interesting. Personal income was up. The government has put so much money in people's pockets that even with the massive number of layoffs, personal income went up. And it really led to some oddities within that report. Lots and lots of bad things, services, which is very big in our economy, down big, travel, medical services, but durable goods actually were flat. And there's some interesting shifts in dollars that are taking place here as personal income is actually okay. But obviously there's big ramifications from the pandemic.
Sure. So there's been a lot of remarkable divergence in stock market performance between technology-focused companies and other sectors. What do you attribute that to?
Lots of items. I think people are projecting that the digital economy is going to swamp everything else, and that's occurring during the pandemic, but whether that plays out beyond the pandemic remains to be seen. Companies like Amazon, businesses surging during the pandemic. Obviously, they're growing well before that, and they're digital champions. A lot of those technology companies are set up for a digital economy, which people are projecting we're heading more and more towards. The other item that really is playing out is the Federal Reserve, and we now have a 10-year Treasury rate, 0.54% or so. Just a massive stimulus by the Federal Reserve has been driving up stock prices, but particularly stock prices of companies that are still able to make a profit in this environment, which those digital companies can. And so they're benefiting from the pandemic, but they're also getting a lot of help from things like the Federal Reserve.
Mm-hmm. And so how do you see the rest of the year playing out, and what should investors be paying attention to?
Well, there's a lot of items. There's such a wide divergence in stock market performance. We were just alluding to some of the digitally focused companies are having a great year, and more economically sensitive companies, companies like Boeing, really having a tough year. So there's been such a massive divergence. But as the year plays out, we're going to get closer to a potential vaccine. Most people are forecasting we will have a vaccine at the end of this year. Whether that comes true or not remains to be seen, but there's a good chance. And if there is a good vaccine and people do take it, which are two ifs, then this time next year things could look far different. And we could see a rotation in the market. It remains to be seen. There's a lot in play, but a company's value is based on their earnings projected way out into the future, and not what's occurring in 1 or 2 quarters. So we're looking at some of those dynamics. Obviously, there's economic dynamics in play. The election is very big, so there's a lot to be looking at.
And so still volatility for the rest of the year?
Oh, for sure. Just the makeup of the market these days lends itself to volatility. What's occurred over the past 20 or so years is you have the exchange traded funds, passive investing has gobbled up so much of the investor base. And I like to use these terms price makers versus price takers. Well, passive investors are price takers. ETF investors are price takers. Buy and hold investors are price takers. They don't really set the prices of stocks. And the larger they become as a percentage of the float, it leaves a smaller percentage of people to sort of make the price. And a good portion of those price makers these days are quant funds and even retail money. It's not as much fundamental price makers these days. So the nature of the stock market lends itself to volatility. And then you just throw in the dynamics that are in play with the election, there's so many dynamics to play out with how you recover from this pandemic. There's some real structural issues with employment, taxation, antitrust. All of these things are going to be in play for a long time here. The coronavirus is just the start of volatility. It's going to, well, even if there is a successful vaccine and we're largely back to normal by this time next year, ramifications are going to be felt for many years to come. So we think we're in the early innings of
Wonderful. Wonderful. Well, thank you for sharing this information, Chris. If you have additional questions for Chris or your waterfront team, please give us a call or drop us an email. Thanks for watching.